Hello, you trader nerds. Welcome in to the greatest trading show on at this particular time right now. Let's just say that. I was going to say the entire world, but maybe not. So welcome in. Hope everybody's doing good. Real traders never trade alone. They trade with their fellow nerds here at Trader Nerds. If you'd like to trade with us, just go to the description below and join our Discord group. I think you'll enjoy it. Lots of smart people in there. And a lot of times when you get a lot of smart people together, they become dumb. If anyone was watching Tasty Trade today, they had a segment with the nerds and Tom, with Anton and Jim, Dr. Jim, and with Jacob Perlman. And the question that they were trying to address is price mean reverting. And Tom and Jacob said that it was not, and Anton and Jim said that it was. And they did not do a great job at all. And you get a lot of smart people together and they're kind of dumb each other down. They all miss the mark. And I will side on the side of Anton and Dr. Jim. Price in equities is mean reverting. And I'm going to prove it to you. And I was screaming the whole time as I was on the exercise bike. I'm like, y'all are missing the very simple thing about price being mean reverting. Let me show you how price is mean reverting in case you watch that segment so that you will be the smartest person in the room. This is a 50-day moving average. It is the average of the last 50 days. So this particular point in time here is the average of the last 50 days. This is the 100-day moving average. You can't hardly see it. It's a little red line there. And this is the 200-daily moving average. What they fail to address is it depends on the timeline that you are referencing. For example, if you're saying the average of the last 50 days, price is always mean reverting. It will always come back to the mean. I can go back through the history of time and show you that price is mean reverting. It goes away from the mean and back to the mean. This is a mean. This is a 50-day mean. This is the 200-day mean that you can barely see in purple. At 200 days, the 200 average dailies, it always goes back to its mean. Price is mean reverting. Now, if we were to take every single day for the market, maybe not so. But if you're talking about over a specific period of time, and the most common moving averages that we use are the 50, 100, and 200, then absolutely price is mean reverting. It will always go back to its mean. And nobody addressed that. Oh, y'all can't see my chart? Well, my God, I went through that whole thing trying to convince y'all something. So let me show you. Thanks for letting me know. Well, it says new share. Hold on a second.
We can see he found it, don't worry.
Oh, y'all saying it. Okay, got it. Good. That scared me. I'm going to make sure y'all can see. So yeah, so price is always mean reverting. It will always go back to the 50-day moving average. It will always go back to the 100-day moving average. It will always go back to the 200 daily moving average, always. And you got all these little doctors and eggheads together, and they don't look at the obvious. Now, if we were to look at the last 1,000 days average, does it go back to that? Probably so, at some point. So you've got to define the time, and price is mean reverting. Any questions on that or any disagreements with that? So Tom and Jacob were wrong. Dr. Jim and Anton were correct. They just didn't do a good job of explaining because it's very clear to see. Matter of fact, we can even see it in a different way. We can do it with volume weighted average price. This is a VWAP, and with VWAP, and it's volume weighted. But it always, price always is mean reverting to what VWAP is. Always goes back to it. It always does. It's either above it or below it, and it will always cross it. Time and time and time again. Price is a mean reverting asset. Always has been, always will be.
Yeah, but you do have to address the elephant in the room too. I'm not disagreeing. I'm just saying you have to address the fact that that mean or that average that you're referring to is a moving target. What generally people think when they talk about mean reverting, that they're talking about static number. For example, with wicks, we all say like a mean for VIX is say 16 or 17,
Yep.
and it will always fluctuate around up and down. Here, if the price continues to go up, so will the moving average. So it's a constant reaction and overreaction around that moving average. And even if you go to a one day movement that you mentioned before, if you just take a shorter average, it'll be the same thing. So the question is, can you take advantage of that or not, like you can in VIX in certain way? So I think everybody is right in a way and everybody is wrong in a way. It's not really the same thing as reverting to a certain mean.
Exactly. It's not the same as VIX, where it goes back to a historical mean, right? If we were to say the historical average for the stock market over the last 20 years, will it go back to that? Well, probably not. There's positive skew in the market, on and on and on. It's probably not going there. But I think in order for us to have a meaningful conversation about is price mean reverting, we have to define the time element. That has to be a part of it. Yeah, so it's different than VIX, whereas VIX goes back to that, what is the historical average over the last 20 years or whatever, 15 or 17 or whatever it is. Yes, it always does revert to that. You can't count on price of the S&P 500 to do that. I agree with that. So it's not in the same. They have different characteristics and different reversions to the mean. But I think for a meaningful discussion, you have to include the time element. So anyway, it's an interesting discussion. If you missed it today, go back to Tasty Trade and watch that. It was really, really interesting. The whole time I'm screaming at them, y'all, a moving average is a mean. It always goes back to the moving average. All right, so the market today is up 0.23%. Someone told me it's a Fed day, and I don't give a rat's arse that it's a Fed day, and you shouldn't either. So who cares? VIX is at 13.94, almost 14. AD is strong today, even though we are in the 15-minute opening range, and we are vacillating across VWAP. Here's the cash open. So we're under the cash open, but still at 0.22%. The Big Green Monster tells us that, yes, we were overbought for only a short period of time. It reverted back to the value area low on this, the 1 standard deviation away from the point of control. We now anticipate over the next 10 days a return to 45.24. And if we continue in this area, it would appear that 45.64 is in our grasp. That's where we're looking for price to go. Is it going to be over the next 10 days? I don't know, maybe so. But we definitely would think over the next 10 days that we're going to have a pop up to the 45.24 as long as we stay in this area. If we keep down here, all bets are off. But I think things are going well as far as what we think. And remember, we look at these moving averages to form our opinions, right? The 200 daily moving average, we're above it, right? Price will revert. It will cross its 200-day moving average at some point. But as long as we are above this, we are in what we would term a bullish market, and we trade accordingly. We also look at the weekly 10 and 20 exponential moving average, which puts more weight on the closer movement rather than the farther away movement. And the 10 is above the 20, and we're above both of them in price. This is bullish as well. We also go to the monthly, which is similar to the 200-day moving average. And we, in the monthly chart, are above the 10-month. Now, you remember we referenced some research on a couple of videos before of why we maintain a bullish balance if all three of these are above those moving averages. And that's why, hey, I'm putting on positions. I don't care. I don't, am I really doing anything to the downside to hedge myself? Not a lot, because I think we're in a clear bull market. The linear regression shows it. We're clearly bull. Let's see, where's my linear regression? Where's my dang linear regression? There it is. Dang linear regression, still bullish, still bullish. Everything's pumping up. Now look at this. Volume, down, 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 down. You see that? Why price is stagnant. Price has been stagnant during that, so I can't really get a read on that. So interestingly enough, let's see how our little account's doing today. We are a 98% probability of profit. So you're telling me there's a chance? Yes, I am. What was his name? But what was Dumb and Dumber's name? What was his name? Jim Carrey's character. Oh crap, what's his name? 41,415 is where we're at. 41,415. So let's put that in. 41,415. Oh, and I also wanted to show you, I updated the skew driver. Skew driver is at 42, which tells me there is not a imminent drop likely based on the skew and the options. It's if anything, I think we would have a more of a chance of having a big move to the upside than the downside just based on the skew. Okay. And for those of you that want to learn about skew driver, I think I got a class on it somewhere in our thing. Just look for skew driver. All right, so we are at 41,415. 41,415. So let's put that in. 41,415. Oh yeah, 41,415, baby. Fire up the band, Rico.
Well, we're moving on up to the side, to a deluxe apartment in the sky.
I don't know what's up with Rico and the band. They're having a little bit of trouble. So got to figure that out. All right, so Rico and the band having trouble. Let's see if we can figure out what our Greeks and ratios are. So let's go to the privacy mode now, and we are at 124.56. Beth is hacking like a... Beth, you okay? 124.56. Okay, that looks good. And VIX is at 13, almost 14. So I would love to see my theta at 0.20, but we're not there yet. So on our buying power, be interesting to see what their buying power is doing. 13,902. 13,902. Even they bumped up some, haven't they? Maybe it's I don't know what it is. All this buying power bumping up. So we're at 33%. We could be as high as 50%. Let's put on a trade. Bobby, aren't you going to wait until the Fed comes out? I don't give a rat about the Fed, y'all. I don't care nothing about it. So let's go out to this 90 days and let's use the 9 delta plan that we've developed. Oh my goodness, I don't see a 9. There's a 7 and an 8 and an 8. I guess we'll go at this 10% probability of being the money. Boy, we're going to get some rich premium today. We're going to pump that up to 30, 23, 25. We're going to sell 2 of them and swing better. I said swing better. What's wrong with this thing? Okay. Unbelievable. Did it, what's it saying? Edit order, review and send order. Won't it let me send it? Order.
Something is wrong with that price too, Bob, because it shouldn't be paying that much. I'm looking at my thing and it's
Okay.
would be paying less.
Let me see what's going on here. This is crazy. 22.75. Let's see. Review and send. Look, it's like it won't let me send it. Oh, well, what the crap? Let's see if we can do my put debit spread. Let's clear my order. So let's say 85, we'd want to be 42 days. So we'll go to the 46 day, 9 delta plan. So we'll go to the 9% probability of being in the money. That's this one. 41.70 we'll buy. And we'll go to the 38.70. If there is a 38.70, yes, and we'll sell that one for 9.50. We'll move it up to 9.75. Send, and unbelievable. Look at this, y'all.
Your platform is locked up. If you look at the top of your screen,
Nothing's moving.
The FBS price isn't changing, bid ask isn't changing. It looks like it's frozen up.
Okay, let's get back in there. That's a good point. It was frozen up. Won't be long, we'll all be frozen up because winters are coming, y'all. Let's see, did I open 2 of those? Yes, I bet I did. And then open 2 of those. Here we go. That's probably good to log in every now and then anyway. So let's log in. Okay, so here we go. Let's get rid of this crap. I hate that I have my orders already fixed up and I got to redo this. Okay, here we go.
Bobby, is the 85-day, the AM expiration, does that make a difference for you?
I wouldn't think it does. Let's see. 85 AM expiration. It does say AM. I don't think that's the case. Let's see.
There is one funky thing with this expiration. Look at the implied volatility with this expiration compared to the other ones.
Mm-hmm.
See
Is it
how
higher?
It's at 50%? I don't know if it's just a platform thing with Tasty, but there's no way that the implied volatility should be 53% on MES right now.
Mm-hmm. Yeah, look at that. 15, 15, 15, 53%. That is strange. Yeah, that's got to be a glitch, right? And I trade the AMs like everything else because we're out of them well before expiration, and it looks like the liquidity is fine. I mean, I guess. Let's see, 9%. Here's 2025. Let's see, now we got a 9%. Let's see if we can get 20, 50, two of these, 85, da 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 da. And we're in. Okay, so now we'll go to that 40. Geez, I guess I gotta go to the 58s now. That's weird. I thought I had a 46 in there, but I guess I didn't. So let's go to 9 delta there. 9 delta, I always use percent in the money. So we could do the 4,100, 3,800.
You don't want to do that when you be taking one off.
Oh, what did I do something wrong? Oh, yeah, you're right. I don't want to buy where I'm sold. Yeah, so clear order. Thank you, Hal. See, I'm a little rusty, y'all. Just a little rusty. So 58 days. I got net shorts there. Oh, that's interesting. So I will do the 4110. Everybody see why Hal said that? 38. There's no 3810, so I'll just do the 3,800. Close enough. 10 and a quarter. I'm spending a lot in it. Okay, that's fine. I'm in. All right, good. So I got my little trade in, got my little theta up, and everything's good. And remember, y'all, how we talked about I kind of like going for 0.2 in theta to kind of get me the return that I really want to get in the account, right? So and we did the math on that last week. Can you please show your hump chart in Tasty Trade? Yeah, let me show. Let's see our hump. Let's see what it looks like. There it is. Looks pretty good, right? And if you want it down farther, we know how to do it, right? We know how to put on those. But for now, I think that's good based on my assumption. So I'm almost got 2 standard deviation protection. If it happened today, that would hurt. We would probably have to roll positions and figure out what we got to do. But for right now, everything looks really, really good. And we're having a really good year in this account. Having a really, really good year. All right, so let's go to the other account, the little Crimson account. Let's see how little Crimson's doing. Hey, Crimson, what's going on? So we are at 30,050, 30,052, 30,052. Let's put that in there. I know that's going to be a high. 30,052. Praise the Lord, Rico. Whoa, wrong thing. Let's see, wrong thing. Let's see, Rico.
Well, we're moving on now. Moving on up to the east side. To a deluxe apartment in the sky.
So we are up 14.24%, while the market is at 15.4%. I told you we were going to catch them. We're going to catch them, y'all. It's just a matter of time. It's just a matter of time before we overtake the market. It's a mathematical certainty, I believe, that we're going to catch them. So let's see here. Let's see what our Greeks and ratios are now. It's amazing we're that close now, isn't it? We're, all this work. And it's not a lot of work, right? Probably 5-10 minutes a day to trade, a couple accounts a day. So it's not that bad. So our deltas are at 69.30. Let's see what that looks like. 69.30. 30. And VIX was at 13. So yeah, look, our theta is at 0.10. But remember, this is the account that I really want to bump it up. And I didn't buy any T-bills last week or yesterday. So we are at $9,700 in buying power. This is the account that I'm willing to go up to 50% in buying power. Let's see if there's any trades that need to be managed. Nope. Everything, no automatic close signals at all. So everything looks really, really good. So I think we'll put on a trade here. You want to? So we'll just go over here, trade, MES. Like my little micros. If you want to do E-minis, do E-minis and do them less often. And we said we were going to go to this 86-day, 9% probability of being in the money. It's the 9 delta plan. Easy peasy. So here I am short a position, so I can sell where I've already shorted a position. So I can sell, no, I need to, sell 2 of these, bump it up a quarter, and do 2 of those, and swing better. Swing better. Come here, baby. Gotta adjust my price. 21. And we are in. So we got to have at least 43 days in our little hedge. We don't have that. So we got to go find the 9 delta. 9 delta. Right here. So I've sold there. So I don't want to sell where I buy where I've sold. So we'll do the 4110. 4110. And the 3810. And there's nothing with 3810, so we got to do the 3800. 3800. Just get it close, right? And I can sell here because I've already sold one, right? So that's fine. So I can sell at 3800. That's 10 1/4. So we'll make it up 1050 to get us sold in there and swing better. Okay. Yeah, Lloyd Christmas. That's it. Stefan, that's right. Exactly it. Okay. So that's it, y'all. That's just how we do it. Now, if you want to put in your hedges, I think we came up with the other day with how to do that, right? You use let's say that you have $100,000 account, then you would use 3% of your account, so that'd be $3,000 a year, divide that by 26, and every week you would buy a 14-day ES option for that amount. That's how you do it. You want to do the hedging. So good session today, y'all. Price is mean reverting, in my opinion, if you look at the mean over a period of specific time. Y'all have a good one. See you tomorrow.